Today we released the FY22 annual letter, and this video is basically a summary of that letter. We're going to touch on some of the key topics that we address in the letter and also talk about some of the secular trends that our portfolio is exposed to. It's obviously been a very volatile 2022 with an almost obsessive focus on the economy and inflation, which looks to be rolling over at this point. We believe that we will be in a low growth world once this volatility subsides, and that's really driven by three key things. One's the demographic headwinds, second one is the large amount of debt that's been built up, and third, the technology or digitization which is happening in the economy, which is a deflationary force. But just touching on some of the key secular trends, the cloud, digital advertising, e-commerce and software-enabled payments. We might just kick off, Alex, with the cloud and talk a little bit about the investments we have there, Amazon, Microsoft, and Google.
Yeah, sure. So those three companies are the three largest public cloud providers. And what we saw during the pandemic was that businesses who had transitioned to the cloud, to these public cloud providers, they fared much better than those who were still on-prem. And so IT decision makers are now all saying that they're going to be spending a lot more money this year despite these macroeconomic headwinds.
Yeah.
So it's an unusual sort of trend that most industries, they're pulling back their spend in the face of the macro uncertainty, whereas in the cloud they're actually increasing their spend.
And interesting, if you go back 6 or 7 years, we've been invested in Microsoft since 2015, but if you go back, what we were hearing back then was this was a decision which was based on cost. But today, that's really not the case. It's really more about security and agility, that's what's driving people to the cloud today.
That's right. Yeah, there seems to be a multitude of reasons why businesses need to be in the cloud, and we really believe that every business needs to transition to the cloud at some point.
No, very good. Digital advertising is the second trend.
Mm-hmm.
Obviously, we've seen, the democratization of advertising,
Mm-hmm.
and this has really shifted from traditional campaigns, which were TV and print and radio, very expensive campaigns available only to the largest advertisers.
Mm-hmm.
But maybe we'll talk a little bit about the democratization of advertising and what it means for a business like Facebook.
Yeah, so I mean, if you go back in the past, it could cost anywhere from $30,000 to up to $150,000 to do a standard campaign, national campaign on one of those traditional forms of advertising. And now what we're seeing is the digital advertising has really lowered the barriers to entry. So small businesses who were previously shut out of the market can now advertise. And with Facebook, there's 200 million small businesses who use Facebook, and roughly 10 million of them are currently advertising. So there's a very large opportunity just within those businesses who are already on Facebook who aren't advertising yet.
Yeah, absolutely. And I guess e-commerce is part of Facebook's long-term plans, but e-commerce is another trend that we're invested in.
Yeah.
Maybe we could talk a little bit about e-commerce, how we're seeing it, maybe specifically bringing in Amazon.
Yeah, sure. So, I mean, we believe e-commerce is fundamentally more convenient than physical or offline retail, and that's going to drive it over the long term. And an example of that would be the fact that Amazon now can ship over 15 million products
to you incredible.
In one day, and 100 million products available for 2-day shipping. So, and they've been increasing that over time. So if you look back at 2018, it was only 1 million products available for 1-day shipping. So they've increased that 15-fold in the space of 4 years. And this is because of the massive investments they've made in their logistical infrastructure.
Mm-hmm. Yeah, absolutely. Logistics and fulfillment really ramped up during the COVID period to meet the consumers, who were all moving online from the pandemic.
Mm-hmm.
So it has been a big boon for a company like Amazon.
And I mean, the market is really focused on the growth rates slowing down, and we believe this is a factor due to the rapid growth in 2020, where e-commerce grew over 40%. It's obviously going to slow down
from those levels.
From those levels, but the market is sort of forecasting this slowdown forward into perpetuity, And when we see numbers like this, we just don't believe that's the case. Maybe there was a bit of pull forward, but there definitely was a change in consumer behaviour and this logistical infrastructure which enables e-commerce to be just so much more convenient.
Yeah, right. And lastly, software-enabled payments.
Mm-hmm. So that's just a very large opportunity. I guess to explain software-enabled payments a little bit first, the payments processors of the past were the banks and big bank partners. They did all the payment processing for merchants. And the software-enabled payments are sort of the new guys on the block. They not only do the payment processing, but they offer a whole suite of software services for the merchants to help them run their business. And this is just providing a huge amount of value to these merchants over and above payments. And we're seeing these software-enabled payments taking share from the legacy payment processors.
Yeah, absolutely. And I think, I know 15% today of total payments are processed by software-enabled players, which means there's 85% still to market share, still to grow into. And we're seeing it in Square, which is an investment, but also in their peers, whether it's a Lightspeed, Toast, Clover. They're all growing at similar rates. So it looks like a good environment for these players.
And a very long runway of potential growth as they take share from the legacy processes.
No, very good. Well, thanks, Alex. If you want to hear more, we've obviously set this out in a lot more detail in our annual letter. We hope you found this useful, and we look forward to updating you on the portfolio soon. Thank you.
Thank you.